Our next guests are all joining us from Cornerstone Mortgage Group. Please welcome Vice President Sean Cahan and loan officers Greg Wynn and Christian Griffin.
Welcome, fellas.
Thank you.
Welcome to the show. Thanks for coming. Appreciate your time today. Sean, good to have you back.
Thanks, man.
Great, Christian. Thank you for coming for the first time.
Absolutely.
Thank you for the invite.
A lot of things to talk about today. You know, doing casting stuff for Win This Listing, I talked to a lot of people who are selling a home and buying a home. A lot of people apply because they're buying a home or something like that, but that doesn't fit for the show. So I talked to these people, and one of the things that seems to be an issue right now that's sort of converse to what I've heard from you, Sean, is that people are having trouble getting approved.
Yes.
And I thought things were loosening up. So I don't know what's going. Can you explain maybe what's happening out there right now?
I think that the overall general guidelines of like Fannie Mae, Freddie Mac are somewhat loosening up. But what's happening is like all the banks are still holding to their overlays or their stricter guidelines. So even though it's still allowed, across like the board, the banks are saying, I just don't want to personally fund that loan. So what's happening is the loan officers are reading or trying to be competitive and saying, oh, we can do that because of these reasons, because it opened back up, but then it actually goes into underwriting and just doesn't happen.
So what you're saying is, 2 thumbs down. So what you're saying is that basically Fannie Mae may be expanding their guidelines to this, but the banks are staying here.
Correct. Because ultimately they're the ones that are taking the risk, right? Yes, they can package up the loan. Yes, they can sell it. But essentially, are there EPOs? Are there early payoffs? Are they, early default on payments? I mean, it still rings a bell. It's still really close to when actually, the catastrophic event happened where, I think that banks are still kind of in the coming out of the trenches.
Okay.
Right?
So, all right.
Makes sense?
What do you guys think about that?
I'm finding a lot just very similar to kind of what you've been saying, that even when we get, a lot of times things are outside the box where it doesn't exactly fit the guidelines. Every situation's a little bit different. And I'm finding when I actually call Fannie Mae, call FHA, and call VA, the answer is, and a lot of times it's going to be a yes. They're really wanting to make those loans. They're wanting to guarantee and insure these loans. But then at the end of the day, the underwriter and the bank has to be comfortable making that loan. And I think that's exactly what you're talking about. Is it may not even be a guideline. There may not be guidelines to speak to a certain situation, but these loans should be getting done. It's just a matter of finding a bank with a comfort level that will actually do those loans.
Yeah. Okay. Christian, what do you think?
The overall trend I've kind of been seeing lately is some fallout from maybe the bigger banks with a little bit tighter overlays, like Sean was mentioning, which is fine because it's more business for me.
I was going to say.
So I'm not going to turn that down, but it's also kind of a wake-up call, I think. A lot of the realtors try and educate their borrowers, some of the hurdles they need to overcome with bigger banks, but sometimes the borrowers need to learn the hard way, and I'm happy to take that over when that time comes.
Yeah.
But it's just a lot of that seems to be falling my direction lately.
Well, I think it makes sense. And we have right now home ownership as a percentage of the population is at a 51-year low in the country, which is remarkable, especially considering what we talked about with Fannie Mae and Freddie Mac, which are the government, the GSEs, right? The government-sponsored enterprises that are sort of taking directions from the government, and the government is saying, hey, we want people to own homes. This trend is going the wrong direction. We've got to get more people owning their own homes. So they're trying to loosen the guidelines. But if, like you said, if certain banks, especially the big banks, the big box banks, if you will, if they're staying here and not going here, then nothing's happening. And then people need to know how to get those things done. I think what you're saying is that at Cornerstone, you guys get these things done. Do you have all of the Fannie Mae guidelines available to you?
Absolutely. I mean, I go into the approach of helping with the underwriting in the fact that let's push them to the limits. Let's go on the outer limits of the box. Let's stay inside of the box and let's try to make those deals work. That not only gives us a little bit more credibility because we're still able to package them up, we're still able to sell them, so we're totally fine there, but it gives us a little bit more credibility when the agents go, hey, I'm not just going to give you, the hard deals, but I'm also going to give you my really good clientele. So our mix and our product mix is like really, really good right now at Cornerstone, which helps us on the profit side, which brings us better interest rates, which brings us more and more flexibility in underwriting. So we kind of look at the whole package and go that direction.
Okay.
So it's a win-win situation for us to actually be on the outer sides of the box on those special deals.
Okay, that's great. Well, it's good to know that they can get done, because I think a lot of people are seeing those things, or they're hearing that guidelines have gotten loose, or they see something on CNBC. But then how does that apply to me as a buyer? Because buyers will get pretty discouraged if they get turned down.
Absolutely.
I think you were saying a big chunk of your pipeline is turn downs right now.
Right now, I was just kind of going through my pipeline. I have 25% out of all the escrows open right now that are actually from turn downs that got denied from somewhere else that I'm in escrow right now, and kind of like a save me deal. The hard thing that we're dealing with is like the big box banks are really trying to go after the market because they're actually just going to be retaining all of their mortgages. So like they're offering, disgusting interest rates, like high balance, 5% down with a 720 FICO score, 3.5%. I can't compete with that. But what I can compete with is their DTI restrictions, their trade line restrictions, their reserve restrictions. Yeah, they can offer this really awesome interest rate. And ours are really competitive. I would say that we're 3.625, 3.75, but to an individual that all they know is interest rate, interest rate, interest rate, they want to go that direction. And then 2 weeks later they come back and they're like, not you're right, because I don't ever try to be like right or wrong, but I try to bring up certain things that, hey, I know that they're unable to fund this loan for these reasons. This is something to be careful with. And then 2.5, 3 weeks later, they come knocking back at the door.
Yeah, I always try and tell the borrowers too, and say how good is a rate if the loan doesn't close. I mean, if you don't get the house, that low rate means nothing. So
I can offer you 1% if you can't close it.
Right. What good is that? So it's all about presenting the value to these borrowers. Obviously, coming from my lips, it's a little like the fox in the chicken coop. But so I make sure that my realtors are trying to educate them as well. Also, do some Googling. It doesn't hurt. Google the bank that you're looking at. See what the other clients are saying. I have a very good testimonial of all my clients. I make sure that they put the words out on how they were treated, what their experience was, close times, rates, customer service. A lot of that adds up to a fantastic experience. If you have a great rate and it's a ridiculous experience, you might never want to buy a house again.
Yeah, well, that's what I'm seeing. People getting very discouraged
Yeah.
because of the fact that the process is arduous, the paperwork is intense, and going through all of that once to be told no. I can understand why someone who doesn't understand these guidelines would say, I can't do that again.
Yeah.
I can't go through that again. So does it make sense? I mean, is there a solution? I mean, does it make sense to run, 2 applications simultaneously? Does that hurt you? Does that help you? What's the deal with that?
I'm a firm believer I do not run 2 applications. If the borrower does, let me know, and I hope that they're open with me about, running 2 applications, or if I see it on their credit report. I kindly just ask, hey, thank you very much for your time. Let us know, if we can help you. But I will not run 2 applications, not only for the benefit of myself and my team, but also for the benefit of the other loan officer. Do they know? Are they aware that we're competing? And it's like, you're already in escrow. Make that decision before you get into escrow, not while you're in escrow trying to say who can, get us to the finish line the fastest.
Yeah, and I think that's what I meant was, up front. Like, should you, since you're getting all the paperwork together, should you go with, maybe try, if you're with a big box bank and you're concerned, you're watching the segment and you're going, wait a minute, we have our application in with right now. Should we run it simultaneously with someone else? But not obviously through the escrow process.
But the pre-approval section, absolutely. Yeah. Like I always say, go out and shop, Go out and go meet with other people. Find the actual person that best fits your comfort level, who makes you feel the most comfortable, because that's the person you want to work with, not so much, getting down, this borrower or this bank is $100 more. In the large scheme of things, like $100, $200, an eighth of an interest rate is not that big of a deal. What was a big deal is your experience, how well it closes, how smooth it is, what documentation. Like Christian was saying, if you have a 3.5% but a terrible experience, you might never even want to buy again, or you might want to never refinance again. You're going to lose why you're excited, right? And so I always try to bring back the excitement. Like, your excitement should be on the house, not worrying about if you're going to get a loan and close on time, because that's not fun.
Well, another huge key too, and I'm glad you mentioned that, is obviously you've got the selling side too. If you're a selling agent and the person wanting to buy the house is pre-approved with some big box bank that doesn't perform, and you've got a terrible history with them, and you've got another borrower, there could be a potential that seller is going to choose the lender that has got a good reputation that can close within certain periods of time. So there's weight in that as well.
Very true.
No
Very
question.
true. Yeah.
Yeah.
Smart selling agents all day long are looking at that. Greg, did you have something you want to add to that?
Well, I think just kind of on the heels of what Sean was saying, as far as the customer service and all of that kind of stuff, we do so much of the customer service on the front end, which is really, that's why a lot of times we don't want to double that, because we know the amount of effort that we're going to put into it. And a lot of these takeover deals that I'm starting to see are where people have gotten the process started with another bank, and maybe even if they just want to refinance, they get 25, 30 days into it and they're like, I don't even know if the appraisal got ordered. And so they'll call me to give them a second look, and I'm like, well, you file several corporations, you own a handful of other real estate, and it looks like they probably just never got to you. And so I think a lot of these big banks, because they're going after so many refinances, they're hitting capacity that if you are a sophisticated borrower, they don't really have time for you, but they don't want to tell you that because they don't want to turn it away. But at the same time, they need somebody that's going to jump on it that day and kind of get going on it and see, can we do this? Can we not? What's your rate and all that? And they're not even getting those conversations until 3-4 weeks in the process, and they give up. And so we're seeing some of that where I'm just taking over deals where the loan officers are non-responsive.
Wow. Yeah. Well, it doesn't surprise me because you're right. If they're looking and targeting for that perfect borrower and you don't fit in that box, you could easily go to the bottom of the pile. We saw that in the short sale market and the RIO market as well. Fellas, thank you so much for coming today. Really appreciate your time.
Thank you.
Thank you.
Stick around for more Smarter San Diego TV, where we guarantee to make you smarter than everyone else, commercial free.